Good morning, trading team, and happy what I think is going to be a nice and choppy, um, potentially fun Thursday. So I'm going to jump right into it, starting with the macro charts. So those of you in the Zoom heard me say yesterday that I think that the bottom is in for the year. Um, I'm going to stand by that until we lose this 93 zone. So just to kind of elaborate what I mean by that is yesterday we made that higher high. To me, we put in a really nice reversal pattern here with these two green candles and that break above the prior day high. Obviously today we're giving up the gains, so we got to be wary of a potential bull trap. I'm not really looking to get too involved in long delta until we get to that 3700 to 3720 area. More about I'll tell you why I feel that way as we move into the intraday charts. So yeah, just looking at longer term, this supply zone still holding. That is the bottom of all of this supply. So there's still a lot of supply to get through, even if the bottom is in. I would be very surprised if it was just a clean run up. So yeah, the forefront of that is still being defended. We're not seeing anything on the volume front here. I tried to circle it, but wouldn't let me circle that subgraph. But we're still seeing that low volume. No one's really interested in confirming this thing one way or another. So, on the macro chart, we're going to be watching for a pullback into here to get, I think, the highest probability long entry. And like I said, if we break this, the assumption that the bottom is in has been disproven, obviously, because there's been a new low. So if we look at the 4-hour chart though, so you'll see on the routine warm up, the pivot today I have about 37.95, so that's what I see as intraday. But if we draw the retracements, which is how I do those pivots, I just use these Bollinger Bands. I like it in real time. I just draw from high to low as they're developing. This is a 4-hour chart. As we can see here, this zone I would consider like, let's say the 38.2 to 61.8 is kind of the pivot zone, and that 50% number is really the primary pivot. So if we just draw a horizontal over here real quick, you'll see in this, I'm going to draw it toward the bottom of this LVN. We're still kind of holding above it. You're seeing we're holding this zone here, and as long as we hold that, I still see the trend as being up. So we don't want to be fooled by this intraday pullback action until we really break below that 38.2 and really close below it. Because I expect if we do kind of pierce it, this to fill pretty quickly. That's still an ugly little spot in the profile. So if that does fill though, I'm going to be looking to buy the dip pretty hard in that 3700, 3720 zone, which again I'm going to go into more as we go into this intraday area. So that's the long-term look. We're kind of running into supply, getting rejected, but still holding the uptrend in my opinion. So as we move to the intraday chart here, here's what's going on in the TPO. We ran right into, so I narrowed this box a little bit. This wide zone was a supply. We put in this nice little TPO here. We put in a poor high there, and as RTH came up and tested it, it was rejected so far, but I want to harp on that poor high. One major thing that you'll notice in the routine warm-up today is we have expanding pivots in both volatility and ES, and that often implies reversion toward the daily pivot, which I think today is at about 37.95. So I'm not going to be looking for too much continuation because of that. And I think that if we do go into this zone, that's when we're going to finally break through it. Because remember that that poor high is weak hands. As price kind of goes toward it, you're going to see a lot of reflexive selling to protect it. But as soon as it goes, that often leads to a breakout type look. And if I'm identifying kind of the first major area of resistance, so we just zoom out here, I really think it's probably going to be as low as like this 50-ish area, and maybe as high as that 76. So again, if we're just trying to draw it, let's do a little rectangle here. If we're drawing it as a zone, I think this would be the extent of that initial breakout, at least before we get some type of consolidation. Obviously, nothing is ever certain, but that's kind of what I'm be looking for there. So yeah, so besides that, I'm just going to take a peek at the routine warm up here. So obviously that 3720, 3700 area, I keep saying it over and over again, is really going to be, I think, going to be a really strong demand zone if we get there. And in terms of identifying that breakout, because I think we can still sell calls as long as we're below that daily pivot at 95, what you're going to be looking for is a break of that poor high and we always look for the false break first because ES loves that false break. But if we start to build time and volume above there, that's when we're gonna probably want to manage risk on any shorts because it's probably an easy 30 points or so, possibly 40 points, possibly more, if they do finally take that out. Let's see. So the major overnight delta is currently on side. So this single that you see developing here is going to be a nice little proxy for obviously we're trying to recover that overnight low. We're trying to put in that trap. As price moves up here and fills in this gap, we're going to want to watch what happens around this single and up toward that current POC of the day. If price gets back above this 85 level, I think it's going to be a quick move to 95. And like I keep saying, in truth, I think we're gonna go toward that poor high. I'm still bullish here. Nothing crazy. I think there's still plenty of room for pullback, but we're going to want to be really careful with those expanding pivots today for trying to get too creative on the short side. Besides that, again, we always have, I think, the best weather indicator we'll say in the market is going to be this VIX chart. It's been working so well for so many weeks, and you're seeing right now what's going on. Consolidation around this major trend line. This trend line is the top of the breakout channel. Once we do finally get below it with strength, we're obviously going to first have to conquer this side of it. But once we get through this zone, so the zone on the VIX contract, this is VXV22, is about 27 to 29. Once we get through that, that's when you're going to probably see a sustained breakout. That's when you might see us start crushing levels and probably move a couple hundred points at least to the upside. Obviously, that 3,900 area is going to be interesting, 3,900 to 4,000. But I think that if VIX really starts to go through here, that's when that's going to be the sign that it's really starting to break. So today we're just seeing consolidation. You saw yesterday that most of the day was just spent consolidating around. We obviously tried to move up on that big push, fell back below, made a lower low. So this is just all consolidation. It's not going to be perfect, especially in volatility. Volatility is probably the least clean chart of them all. So we're just going to want to watch. It's really a level 29. 29 on VXV22 is going to be the leading indicator of which way price is going to go. So with everything in mind, like I said, it's a choppy day. I encourage you to look at the routine warm up for levels, but just be careful of anything that's super close to the money. With your risk, probably going to want to keep it nice and tight because of those expanding pivots. And we'll see what the market gives us. So I'm going to come pop in the Zoom now, and I'll see everybody in a second.